Traders are still poised to sell the US dollar after the news about a slowdown in the US consumer inflation in October. There is a growing likelihood that the Federal Reserve could soften its rhetoric. Moreover, in light of the data on the US factory inflation released yesterday, this scenario is getting more realistic, pushing the US dollar down. What other news could influence market sentiment at the end of the trading week? Let's discuss it in our regular TV calendar on InstaForex TV channel. This week, the US dollar is unlikely to find an excuse for an upward correction in order to get rid of its oversold status. Even Australia will be able to provide the information which could revive investors' interest in its assets. The Reserve Bank of Australia has already eased the pace of a monetary tightening, which has been already priced in by the markets. Now traders are able to respond to macroeconomic data. On Thursday, Australia is due to report on its labour market, which is expected to look robust employment growth. During the European session, the UK Exchequer will unveil its autumn economic forecasts. Finance Minister Jeremy Hunt will present the government's fiscal plan, including the information on a tax increase as well as spending cuts worth almost £60 billion. The government aims to take such measures in an effort to sort out its public finance and revive trust in the domestic economy. If the markets welcome the government plan, the pound sterling will gain ground in response. During the New York session, market participants will take notice of a report which will shed light on the overall economic conditions in the United States. The data on housing starts will be on investors' radars. Housing construction is always accompanied by the beyond consumer activity and building your infrastructure's facilities. And in turn, it means a fresh impetus in economic growth. Market sentiment in the Asian-Pacific session on a Friday will depend on the inflation report from Japan. Consumer prices are expected to rise to 3.2% on year, higher than the target level of around 2% set by the Bank of Japan. Due to such inflation acceleration, investors hope that the Bank of Japan will eventually revise its ultra-loose monetary policy and will begin rising interest rates. For the time being, the regulator maintains its key interest rate at minus 0.10%. Meanwhile, the central bank is ready to adjust the way it purchases exchange-traded funds. The Bank of Japan will consider the cost of holding each ETF and choose those funds with the lowest risk fears when they are purchased. Traders are anticipating more resolute moves from the regulator. Another report, which is also due on Friday, will assure the markets that the Bank of England intends to go ahead with aggressive rate hikes after 2 months of a sharp decrease. Retail sales in the UK could have rebounded by 0.3% on March in October. Nevertheless, consumer activity is subdued by soaring consumer prices and the high borrowing costs. The annual rate of sales remains on a negative territory at minus 6.5% per annum. This will be a convincing argument for the Bank of England to continue its struggle against high inflation through rate hikes. Such prospects are bullish for the pound sterling. On Friday, ECB President Christine Lagarde is likely to remind the markets about the central bank's agenda. Nowadays, all changes in the ECB's monetary policy help the single European currency to assert its strength, taking advantage of the US dollar's weakness. At the same time, dollar-denominated assets will hardly be able to find support on a Friday. Investors will be alerted to the report on the US housing market. Existing home sales are expected to decline by 8% in October. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.